Welcome to the Credit and Collection News podcast. We are live and we are getting ready to do this. We've got Congressman Andy Barr with us today, talking about all sorts of things that we've done. Andy has spoken at a couple of our conferences before, and is so gracious to come on the podcast and talk about what's going on in D.C., what's also going on in Kentucky. Andy's served as the U.S. Representative for Kentucky's 6th Congressional District. It's been about 10 years, I think now, right? Since 2013? 11 years. 11 years. That's a long time. So, he was a young man when he started, and you know what? Now we see what Congress does to you. Andy is the senior member of the House Financial Services Committee, where he's chairman of the Influential Financial Institutions, the Monetary Policy Subcommittee on Oversight and Key Financial, and you oversee the CFPB, is one of, as I know, who regulates our industry, which is always CFPB is always a big name in our industry and what's happening. So Andy's tied into a lot of stuff that's regarding our industry, so we thought that would be a great person to kick off the podcast session to do this. So welcome, Andy.
Steve, great to be with you again.
I know today's a big day. Today, as we were just talking before we went live, we were talking about how you've got the big vote coming up to elect a new Speaker of the House. So that's exciting. It's probably also frustrating. It's probably also a lot of things, but I'm not going to put words in your mouth. But let's talk a little bit about what's going on in DC and just what's going on with your committees and things that are happening in our industry, as well as what's happening politically for you and all of DC.
Well, Steve, you mentioned that I've been in Congress now for 11 years, and you see that I've lost some hair since I've been in Congress, but that's not just age. I think I've lost a lot of that hair in just the last 12 days while we have struggled with this speaker's fight within the Republican Party. I'm sure that many watching this have different political views, Democrats, Republicans, but the bottom line is whether you're a Republican or a Democrat or an independent, a conservative, a progressive, a moderate, we need a Speaker of the House.
Yeah.
The American people deserve that. They need a functioning government. They with everything that's going on in the world right now, with Israel on fire, with threats ranging from Vladimir Putin to Beijing, the world is watching whether our democracy can work and function properly. I know for a fact that the vast majority of my Republican colleagues agree with that. 96+% of my colleagues voted against the motion to vacate. And you owe it to your philosophy to win. And what I've said to my 8 colleagues who voted to vacate Kevin McCarthy for whatever personal reasons that they had, they were not advancing the conservative cause.
Right.
Because every day that goes by where we do not have a Speaker of the House is a day we don't get to pass conservative appropriations bills. We derail regular order. For those who argued that, well, we need regular order, we need to avoid omnibus spending bills, we need single subject appropriations bills. That's what we were doing until they vacated the Speaker's chair. We were passing conservative appropriations bills in regular order. We had oversight of the Biden administration, including the CFPB. We had inquiries, including an impeachment inquiry that was ongoing. We were fighting and passing border security legislation. So if you are a conservative, if you are a Republican, if you want checks and balances of the Biden administration, if you want a check and balance to the Democrat-controlled Senate, why on earth are you derailing the progress that was being made over the past 9 months? Why are you joining with Democrats to derail a conservative agenda? Look, I'm inclined to work in a bipartisan way where we can, but the way you set that up, the way you set up bipartisan agreements is that you work together as a party to maximize the leverage you have when you go to a negotiation with the other side. And so, look, if you're negotiating a workout of a debt, if you're a creditor and you've extended credit, if you're in collections, and you're working with the borrower, you wouldn't want to go into that negotiation where all of the creditors are disagreeing, or at least one creditor is disagreeing within yourself about what you're going to do. You have to get your strategy together when you go into that negotiation to settle that debt. That's the problem we have. Unity is our advantage, and division is when we lose leverage and when we give control to the other side. So, look, I supported Kevin McCarthy when he was taken out. I supported Steve Scalise. I still believe he would have been an excellent speaker as well. Now I'm supporting Jim Jordan, and I've said to my colleagues who supported McCarthy and Steve Scalise, look, I get it. I get your frustration. I get the fact that a small handful of people derailed the progress that we were making. But instead of doing the same thing that the holdouts did before, show them what a good teammate does. And a good teammate supports the person who prevails with the majority of the majority. So that's what I'm going to do. I am looking for a speaker. I think there's a lot of different members in our conference who could do the job. But if we don't elect anyone, we're going to continue to operate in paralysis when, frankly, the whole world, including our key ally in Israel, needs us.
Right. That makes sense and stuff. And you only have so much hair that you can give, right? So therefore, it's
that's right.
At a certain point, you're like, okay, we got to do this.
That's right.
And that makes sense. You mentioned the CFPB, which is, like I said, that's near and dear to our industry because we watch that. And I know you've talked a little bit about that. There's been a lot of stuff talking about, where does the CFPB go? Obviously, they're in front of the Supreme Court because funding is one of the issues that they're looking at. Does the CFPB continue to run off an individual in charge, or do they switch to something like the FTC that has committee and by charge, and whoever is sets the precedence with 3 versus 2? Obviously that's some big issues that are out there. Let's talk a little bit about the CFPB and your thoughts on that.
Well, I was in the front row of the U.S. Supreme Court just a few weeks ago, listening to the oral arguments in the case of CFPB versus Community Financial Services Association. 12 years after the Dodd-Frank law was passed, we finally had this case before the Supreme Court challenging the constitutionality of the funding mechanism within the structure of the Bureau. And I think this is a very, very important case before the court, not just as it relates to the constitutionality of the CFPB, but broader than that, the extent to which Congress can, through a statute, delegate away its power of the purse, its appropriations power that is given to it in Article 1 of the Constitution. This is a separation of powers case. It is a critical case about the checks and balances. I believe strongly that the decision by the lower appeals court was the right decision, striking down the funding mechanism. The way the Bureau gets its funding, there is no analog anywhere in the history of our country in the way bureaucracies work. That is to say, this agency, very uniquely in the constellation of all the history of federal agencies, receives its funding through an opaque and arbitrary formula from another entity, the Federal Reserve, which is partially a non-governmental private entity that is itself exempt from the appropriations clause. So it's double insulated from political accountability. Now, it is true, as the CFPB argued before the court, that there are other examples of federal agencies that are self-financed. In other words, they are kind of exempt from the appropriations process insofar as they get their funding from fees and fines and the operations of their agency, their enforcement operations. But that's not what happens with the CFPB. The CFPB draws its funds from the Federal Reserve, Why is that important, and why is that different from the Customs Office earlier in our republic, or from the Securities and Exchange Commission, or the FDIC, or some of these other self-funded financial regulatory agencies? Because their funding is still limited by the activities related to the entities that they regulate. They can't just get basically an unchecked stream of funding. Now, there is a cap that the Dodd-Frank law put on the agency. But what happens is the director can just draw down whatever they want. There is no meaningful oversight by the Federal Reserve. And in fact, early in my congressional career, I asked Janet Yellen, when she was the chair of the Federal Reserve, whether or not she reviewed the budget requests from the Bureau. And she didn't even know the answer to that. This is an unchecked agency. And the reason why you see so many bad arbitrary policy decisions coming out of this agency is not only because it's not a professional bipartisan commission, a multi-member panel of nonpartisan regulators and administrators, but because there's a single partisan director that draws down effectively whatever he or she wants in terms of funding from another entity, the Fed, which is itself exempt from the congressional appropriations process. So it's double insulated from political accountability. That's why so many of the administrative actions and enforcement actions of this agency are completely separated from the rule of law, and why it's so arbitrary and capricious, and why there's rulemaking without rules, and why they try to change the law unilaterally without consultation with anyone else. It's the most authoritarian agency in the entire federal bureaucracy, and it has no analog, and it's so inconsistent with the democratic principles of our country. That's why it's unconstitutional. I will say, having been in the chamber, in the Supreme Court chambers, and listened to the oral arguments, I think you have three justices that are poised to rule the right way, to strike down the structure of the funding mechanism: Justice Thomas, Justice Gorsuch, and Justice Alito, who was very strong in his questioning. I think three additional justices are maybe up in the air: the Chief Justice, Roberts, Barrett, and Kavanaugh. And then I think there are three that are very, very supportive of the current structure, and would argue that because Congress passed the Dodd-Frank law, Congress has effectively complied with the appropriations clause. That's really not the issue, though, for those liberal justices, in my opinion. It's whether or not Congress can constitutionally delegate away its own authority to the executive branch. There is an important principle of the separation of powers at issue here, and I think those justices are way off base. Kavanaugh, and I don't know if this is his actual view or whether his questioning was focused on kind of a devil's advocate approach and trying to really get at this question, but he was of the view, or at least through his questioning, he was kind of making the argument that, well, Congress can change this. Congress can retake its appropriations power, namely, implying that they could pass my bill, which would subject the Bureau to the congressional appropriations process. And because Congress can do that, then it's constitutional. I would submit to Justice Kavanaugh that for 11 years, I've been trying to subject the Bureau to the congressional appropriations process. And just because hypothetically the Senate one day could agree with me, and hypothetically one day the president could sign that amendment to the Dodd-Frank law into effect, that doesn't remedy the state of affairs currently, where you have an unconstitutional agency. So the fact that Congress could remedy the constitutional defect sometime down the road doesn't make the current structure constitutional today. And so the Supreme Court needs to do its job and vindicate the separation of powers, and say that this agency, as currently structured, violates the separation of powers, violates the appropriations clause. Hopefully there will be 5 or more votes to do so. But I led an amicus brief on behalf of 160 plus or so of my colleagues to the court, arguing for this position. And the Financial Services Committee earlier this year, we did pass legislation that included my bill to subject the Bureau to the appropriations authority of the Congress. But it also has some other structural reforms as well. That bill is poised to be put on the House floor whenever we can get a speaker and get our agenda going again. But it would do a number of things. We call it the CFPB Transparency and Accountability Reform Act. It would convert the Bureau to an independent agency led by a bipartisan commission, kind of like the SEC or the CFTC, even the FDIC board, which is bipartisan in nature. It would eliminate the Bureau's funding stream from the Fed and bring it under the regular appropriations process. That's my bill, the TABS Act. It would establish an inspector general for the Bureau, separate and apart from the Fed IG. It would require more private sector participation and less government interference. It would create a new Office of Economic Analysis and require more cost-benefit analysis for the agency's rulemakings and guidance and other adjudicatory activities. And it would require the Bureau to specifically consider the impact of proposed rules on small entities. So if we could pass that bill, we could actually fundamentally improve the accountability of this agency.
That's and I know from an industry standpoint, that's a lot of our readers. That's one of the things they do. Because again, most of the readers that are there want to be part of. That's why they come to the conferences. They come and listen. They'll listen to the podcast, and the reason they do that is they want to comply. They want to follow the rules. They want to do the things that are right. And I think that's one of the things I think we can all agree on. Is these are for the good players, and the good players do want to do that. They want to be in compliance. They want to do all the right things. The bad players, I think everybody would be happy to turn them all in and get them out of the industry and go that route. Regulators are there to, do two things: get rid of the bad guys and keep the good guys in line to make sure that they're doing everything that they should be. But you don't want to over-regulate, and that's, that's the debatable side.
And if I could just say, I think because they're so insulated from the real world, I think the CFPB makes these mistakes, not understanding the important role that the collections industry, for example, plays in a healthy credit market that makes credit available and affordable for people in America who need to borrow money for a variety of things. And it's called the Consumer Financial Protection Bureau. The mission is supposed to protect consumers. But it seems like every proposed rulemaking that this agency engages in is actually, whether they know it or not, hurting consumers, because they don't understand, these bureaucrats, and Director Chopra doesn't understand how credit markets actually work. If you have, if you're as a lender, as a credit provider, if you have some confidence that there is some collection mechanism out there, that gives you more confidence in extending credit to people with on the lower tiers of the credit spectrum. Right. That is good for consumers. And take, for example, this proposed rule on credit card late fees. Okay, so we're going to lower the safe harbor from $39 or whatever it is to $8. And we're going to say to the 75% of Americans who never pay their credit card late, never, even if they're subprime or lower, below prime borrower. We're going to say to them, we're going to lower your late fee, even though you never incur a late fee. And so now you're going to have to pay a higher APR. Is that protecting consumers? Really? They don't even understand this.
Right. Right. Yeah, that's that kind of goes back to the fundamental. Should we be teaching our high school kids about credit and all that, and especially our college kids. That should be the mandatory classes they should be teaching, as opposed to maybe some liberal arts stuff that might not be as valid in today's world. I probably just insulted all the liberal arts folks out there, but hey. You know what? We're all in this, so here we go to do it.
Hey, economics is in the liberal arts schools.
And it's valuable, but you've got to have a balance, and so you should have What you shouldn't have is people that are given credit that don't understand, like what you were just talking about. If your APR is ridiculously high and you can't get out of it, and you're consistently not paying your bills, or you're only paying the minimum, and you're looking at a 20 some odd year payoff for a small loan, that's not really what you're signing up for. People don't understand that. So just because you're making the minimum payment, you want to understand what you're kind of getting yourself into. And especially with the cost of a house, a car, everything else.
Yeah,
you
with
need
interest rates the way they are because of inflation, and by the way, I'm I'm a Fed critic. My job in the Congress is chairing the subcommittee with oversight over the Fed. The Fed failed the country because they parroted the administration's line that all this spending, all this fiscal stimulus that was creating excess demand in the marketplace, that it was transitory inflation. And because of that, they delayed their tightening program. Had they started their tightening when the Congress and this current administration were spending beyond their means, on top of all of the bipartisan COVID spending, they, I believe, would have been able to settle at a terminal Fed funds rate that's much lower than it is today. So that was a monetary policy failure. And if you go back to March and the bank instability that we saw in March, that also is connected to the monetary policy errors and the fiscal policy errors. Certainly, there was interest rate mismanagement and deposit concentration risk issues, and huge uninsured deposits associated with the Silicon Valley Bank failure. But what was the underlying cause? The underlying cause was too much spending, which created 40-year high inflation and a Fed that was slow to respond. And as a result, the fastest tightening cycle in Fed history. That makes the job of managing interest rate risk much more challenging. So I think the Fed bears some responsibility. And now the Fed is proposing, with this Basel III endgame, increased capital requirements, which is going to constrain access to credit, when that really isn't the issue. Our banks are very well capitalized. Silicon Valley Bank did not fail because it was not sufficiently capitalized. Obviously, at the end, it was insufficiently capitalized. Right. But no bank can sustain a $42 billion run in 48 hours. The issue ultimately was interest rate risk. And the bulk of the Fed's proposals now are about rolling back regulatory tailoring, putting more pressure on mid-size and regional banks that, frankly, don't need that kind of regulatory pressure right now. And the result is going to be a barbell banking system. If we don't push back on Michael Barr and his proposal, which is not responsive to the actual crisis in the banks from last March, if we don't push back, the result is going to be more consolidation, where you'll have a handful of GSIB banks, systemically important banks, and a smattering of community banks, but no regional banks, because right. There's just too much regulatory pressure. They're going to be putting Wall Street style capital requirements, stress testing, and other requirements and liquidity requirements on non-systemically important regional banks. That is a recipe for more consolidation, more uniformity in banking, and frankly, less financial stability. What gives our banking system stability is the diversity of our banking system. The fact that we have community banks, mid-sized banks, small regionals, super regionals, and globally systemically important banks. We need them all. And to apply a one-size-fits-all capital regulatory regime on every bank is a huge mistake.
Well, that's like I said, you're giving us a lot of stuff to think about and stuff, and like I said, I think that obviously the first step is to make sure that we have a speaker, because that gets us at least in the direction of getting the bills passed, and then hopefully getting them over to the Senate, so they can start to look at that and negotiate the compromises that you guys have to do to make sure that they become laws and get things going. Is there anything else that you see that are affecting our industry or just the overall general sense as, like I said, what's happening. I know we talked about the vote coming up, but are there other things that you feel are valid to us as an industry or us as voters? I mean, there's a lot of stuff that's happening in the world, and we've got 20 minutes and stuff to talk. How do you kill the world in 20 minutes? You can't. But what is it that you're thinking from against where you're sitting right now?
Well, two other issues I'm monitoring right now in the Financial Services Committee and in the Financial Institutions Subcommittee. One is the Credit Card Competition Act, which is a probably maybe well-intentioned idea that goes at interchange fees on behalf of merchants, but really is anti-consumer once again. You got to dig into these issues. I know that Main Street retailers and merchants don't like the cost that they have to incur with interchange. I get it, but the provision of financial services costs money. And the innovation that we've seen in preventing fraud detection and prevention, of protecting consumers from fraud, they're remarkable. And that, in order to do that, it takes investment from the financial services industry. And this idea, and by the way, rewards too. We saw what happened with Durbin. One, rewards went away with debit. And so if you want to get rid of rewards, and if you want to get rid of all the anti-fraud innovation that's happened in credit cards over the years, go ahead, pass this bill, because you're going to expose consumers to more fraud. You're going to have less innovation. You're going to do away with all rewards on credit cards. And here's the point that's not being made, that I think is very, very important. This is not about protecting competition. It's about eliminating competition, because you're taking the choice of routing away from the consumer and you're putting it in the hand of the merchant. And so your payment could, as a consumer, is going to be networked through a route that you are not necessarily approving, that the merchant chooses for you, and it may not have the fraud protection that you choose. Consumers get to choose right now: Visa, MasterCard, Discover, American Express. They can route it the way they want to.
Right.
And look, I'm a free market capitalist. I want more competition. More competition is better. But this idea that we're actually promoting competition with this proposed bill is wrongheaded. It's not correct. And so let's keep the decision in the hands of the consumer. And final point on this: if you want less interchange cost as a merchant, innovation is coming. And for banks and for the folks on this conference right now, they're going to have to grapple with this as well. And what's coming is the blockchain. Payments over the blockchain, which is lower friction or frictionless payments. And a lot of the credit providers obviously operate in a world of friction. So that's something that I think the financial services industry is going to have to deal with coming forward. But it's going to help merchants and retailers reduce their interchange costs, because payments are going to gravitate, at least in part, to the blockchain, which is a much lower friction universe. And so what I say to my merchants who want this bill: no. You all are business people. You are capitalists. When has the government ever improved, the situation with no unintended consequences? Innovation is the way forward, not central planning and regulation from Washington.
Couldn't agree with you more. Talking a little bit before I let you go, because I don't want you late. But your charity, your bill and stuff, I know that you set that up for your wife who had passed away. Let's talk a little bit about that before I let you run, just to kind of give us an update on what's happening there, and also, like I said, let's
Steve, thanks a lot. My late wife, Carol, she died at the age of 39 of a sudden cardiac arrest. And she was an awesome mom and wife and friend, and we miss her dearly. She passed away over 3 years ago. She had mitral valve prolapse, a valvular heart disease. We didn't think it was a big deal, but obviously it was. And Unfortunately, 25,000 Americans die of sudden cardiac death as a result of valvular heart disease every year. We channeled our grief into trying to help other families so that they would avoid the same tragedy that happened to me and my girls. And so we passed a bill, bipartisan, through the Congress called the CAROL Act, the Cardiovascular Advances in Research and Opportunities Legacy Act. That bill is bearing fruit right now. It's dollars for the National Institutes of Health, the National Heart, Lung, Blood Institute, to find better ways of detecting whether or not these valvular diseases are life-threatening or when they're not. What's really sad about Carol's case is and the reason why we were not alarmed is because the vast majority of people who have MVP don't live long and healthy lives and don't have a problem. But 0.2% experience this sudden cardiac death. It happens more frequently with young women. So our bill is going to create a new specific line of effort at the National Heart, Lung, Blood Institute to provide that research to help cardiologists differentiate between the cases that are life-threatening and the vast majority that are not. And the good news is that there are interventions, surgical interventions that can save lives. As long as you know you've got you're one of those folks in a life-threatening situation, and most people don't know that they are. So we think we're making great progress. We've got a private charity effort that's providing scholarships for young women going into science, technology, engineering, and math as well. So we're carrying forward Carol's legacy, and we are going to make a difference with this.
Awesome. There's always some good news out of tragic news, and that's what you want to hear. I mean, you want to do something. It's bipartisan. People buy into it. I think it's a great deal, and I think that you're doing something good for the world, which is again, that's what you want. Those are the stories that nobody wants to talk about because that doesn't make the front page type stuff. But like I said, I know that it was a tragedy. Your girls are doing. They're doing well.
Yeah, their mom is proud of them. They're doing great.
Awesome.
We got a soccer star, we got a volleyball and basketball star, and they're both doing well in school. So, in fact, I think I've got a FaceTime appointment with my youngest tonight. She's got a test on the scientific method tomorrow morning. So we're gonna do a little. I got to be in Washington for this speakers thing, but I'll be FaceTiming with her to get her ready for her. Her quiz tomorrow.
Fantastic. I know how that goes. So it's you know what? It's the best time of life. So enjoy every minute you can with the girls and do that. And congratulations on getting remarried.
Thank you.
I know you just did that. So our best thoughts and all that to you, to Davis and to the girls, because that's like I said, you know what? Like I said, things are heading in the right direction for you. It's good to see a smile on your face.
Thanks, Steve. Great to be with you as always, and for all who are part of your network and interested in the work that we have. We want your feedback. We want your input. Give us a call and give us your feedback on what you're concerned about, and we really care about what you all do and your industry, and we recognize how important it is to our credit markets and the health of our economy.
Appreciate it, Andy. Like I said, good luck with the vote. Hopefully it goes smooth today and everything starts to roll the right way, the way it's supposed to. So appreciate the time, and we'll look to get you back to one of our shows soon.
Great, Steve. Thanks so much.